Hey guys, what's going on? It's Troy Price back with another investing video. If you're new to the channel, subscribe to the channel. If you have not already, if you're new and you're dropping by for the first time, please leave a like or a comment if there anything in these videos that are interesting to you. So first of all, I just want to give you guys a little bit of update on the market right now. So in August, we did have a little bit of a downturn. Historically, August will have a little bit of a downturn. It's one of the worst months. It used to be September. So I believe that in the August-September time period, that's probably the time where the market is most likely to slide down or has historically slid down. But what we're seeing at the end of August is because we had losses previously, now we're seeing the market tick back up at the end of August heading into September. But a lot of that is hedged on, we are waiting to see how the interest rate hike is going to go at the FOMC meeting that's coming up in September. So we will see Fed Jerome Powell see if they decide to raise the rates or not. And a lot of that is based on the economic data. So when you guys are investing in the market, what you need to know is keep up with the economic data. You can read about this. It doesn't take long. You can do this on your lunch break, just when you get up in the morning, or when you get off in the evening when you're just at home is what I do. So I'm always keeping up with these. I'm looking at these every morning around 5:30 in the morning. I'm looking at the economic data for the day. I'm looking at the features for the day. And the features are actually the points that are telling you what the Dow Jones, what the S&P 500, what the NASDAQ may be opening up higher or lower. So I use the CNBC app, so I'm looking at a lot of times. I'm watching features on TD Ameritrade, Thinkorswim. So the market is determined by the economic data, if it's good or bad, if there's pessimism in the market. If the market is all good news and we have like stimulus money being printed, we have job reports, job openings at an all-time low and all-time high, and we have low barrier to entry on getting a job. There's just a lot of money in the system, and Wall Street feels good about the earnings of companies. Then of course the market is going to boom. That's the time that you want to be holding stocks. I want to be holding stocks whether the market's going up or down. When the market is down, it's the best time to buy. I have learned not to sell out in a little bit of a downturn, because I know that my long-term account is what makes me the most money. While I'm working on my trading, I trade options, I do swing trades. So I'm still, getting that money and putting that into some long-term. I try to have discipline to take some of that money set aside. So if you guys are working, whether it's 3, 4, 5%, 10%, whatever you can do, just take that money, set that money aside, put that in your long-term account for your long-term investing, and I promise you it will pay off. I have made the most money long-term investing. So let me just give you guys a quick update on a few things. We have private payroll data from ADP. We have jobs added in August dropped to 177,000 from the estimate of 200,000, and then the estimate in July was around 371,000. So the jobs are slowing down some, that they're adding less than we expected. So as a result, the market's going up because we hope that the FOMC meeting, that they don't raise rates, because the market seems to be slowing down. That's what they want. Rates are higher, the economy slows down. Also, we had a downgraded revision on GDP to 2.1% annually, and that's a little bit lower than expected. They were expecting a higher GDP growth, but it is still, I guess, a strong number, even at 2%. I know China also had, I think it was manufacturing data that was like at another low, so that is why people look at China as one of the biggest economies. If they're slowing down, then they think the overall global economy is slowing down. Then we have Thursday, we have the jobless claims report, and Friday we have non-farm payrolls, which everyone's looking forward to. So based on how these job numbers come out, the Fed could be more likely to keep rates the same and hold them and not raise them, or if the job markets are looking really strong, inflation numbers come in as we are still seeing inflation tick up, then they are likely to raise rates. They can slow the economy down further. Consumer confidence was reported at 106 based on the Dow's estimate of 116. So even consumer confidence is lower. We believe people are spending less money now. Then the JOLTS report showed there are about 8.8 million jobs available, and that was in July. So that will be updated in August. But right now, it looks like there are less jobs than there previously were a couple months ago. And we still have rate hikes limit for September. We're not sure where that's going to go just yet, so everybody's on edge. They're thinking that there's a high likelihood that the Fed will keep rates the same and not hike. So because of that, we have uh, stocks booming, and obviously as the recovery comes, we have Nvidia, who's hit over $500 a share. I don't know what it is at the time you guys are watching this. Tesla's at about 255. So these stocks that people want to get into because they believe that the rates may stay the same, they won't hike any. People are piling into these stocks. So if you want these stocks and these are stocks that you want to own, put out a price, make sure it's a price that you want to get in, wait and be confident in that price and be patient, because I promise you it will pay off. So I want to give you guys a little update. If you guys have any questions, please drop them in the comments. Give this video a like, and I'll see you in the next video. And I hope that you guys are being smart and wise investors. If you have any other questions, please let me know. Thank you guys for watching this video, and subscribe to the channel, and I'll see you in the next one.